In the next session, we will hear from the chairman and the chief executive of the United States Commodities Future Trading Commission. That's Heath Tarbert. Moderated by Joanne Barefoot, the chief executive officer and co-founder of the Alliance for Innovative Regulation. This fireside chat will discuss the pandemic and the impact of it on operational resilience, market infrastructures, and cybersecurity. Let's go over now to Joanne and Chairman Tarbert.
Thank you so much. And it's wonderful to be back at the Singapore FinTech Festival. It's one of I think it's my favorite conference in the world every year. And I'm honored to be here with Chairman Tarbert of the CFTC. Welcome to the panel. Mr. Chairman, I think for this international audience, it would be good to start with a little bit of an explanation about the Commodity Futures Trading Commission and what your remit is.
Well, thank you so much, Joanne. It's really wonderful to be here with you. And of course, it's my distinct pleasure to be here at the Singapore FinTech Festival. What a spectacular event. So, of course, people are asking, well, the CFTC, we think we've heard of it. What exactly is it? Well, I like to say the CFTC is perhaps the most important financial regulator most people around the world have never heard of. The Commodity Futures Trading Commission, what we do is very unique. Our mission is to promote the integrity, resilience, and vibrancy of U.S. derivatives markets through sound regulation. There is no other regulator like the CFTC because we have one purpose and one purpose only, and that's the derivatives markets. So we regulate the derivatives markets around the world and certainly in the United States. And it's important because the derivatives, whether it's futures, options, or swaps, all of them ultimately relate to underlying assets. And those underlying assets span virtually everything you could think of. So I like to say the CFTC regulates effectively everything from corn to crypto. And so it's very important. The CFTC has a major impact on prices around the world of everything from agricultural products, energy products, precious metals, as well as interest rates and things like that. So that is what the CFTC does. But because there are a number of things like digital assets that fall within the definition of a commodity, we find ourselves also working on the cutting edge technologies that you're discussing here at the festival.
Thank you for that overview. So we're talking about the COVID pandemic and its impacts on financial markets. And I think it's fair to say that the pandemic is accelerating all the technology trends that were already in motion. I've been thinking we're condensing a decade's worth of innovation and technology adoption into a few months really this year. When you look around the world at the top issues emerging because of the COVID pandemic, what do you point to as the most important trends?
Well, there's no question, Joanne, that the pandemic has really changed things. I mean, just think about you and I sitting here via the computer and everyone watching us from all over the world. That would have been unheard of a couple of years ago, despite the fact that, as you say, the technology was already there. But now we're basically using it. And so what we did was at the CFTC was really think long and hard about, now that we found ourselves in a situation where people were working remotely, they were socially distancing, we needed to ensure that our markets remain orderly and liquid despite that. So we went through the first thing we did was issue a number of temporary orders to basically ensure that the markets continue to function with social distancing. The other big lesson was the digitalization of our markets. 20 years ago, 30 years ago, everyone traded derivatives in pits, in trading pits, open outcry, we call it, and that's true all over the world. Well, because our markets went very early into digital electronic markets, we were able to keep those markets running just as efficiently as they did before, despite the fact. So I think you're going to see, in terms of trends, you're going to see that continue. You're going to continue to see our markets become more and more electronic and electronically driven. higher frequency, et cetera, so they can continue to function regardless of whether people are working remote or not. The other big trend, of course, we're seeing is digital assets. And I know we'll talk a little bit about that more, but I think people are putting more and more emphasis on digital assets, on their value, on their trading, and also the applications of blockchain. And the fact that we have a COVID pandemic and people are working remotely has only hastened that development.
Staying on the COVID impacts for a moment, I know you have talked about the impacts that you've been seeing on operational resilience, non-bank financial intermediation, cybersecurity. What are the important trends that you're observing there?
Well, the great news is that COVID-19 essentially provided a real world, real life stress test of the US financial system and the global financial system more generally. And that is something that's really important, because I think after the last financial crisis, everyone was looking at themselves and saying, look, we put into place all of these so-called reforms. Will they actually work? And I think the answer is, on the whole, an overwhelming yes. Our derivatives markets, for example, the ones that I oversee and my agency oversees, 10, 15 years ago, there would have been a concern that derivatives amplified systemic risk throughout the system. But because we put in centralized clearing as well as margin requirements for all of these assets that are traded, we actually found that the derivatives markets were shock absorbers for systemic risk. And you have to remember, Joanne, because there was so much volatility, we saw more trading than ever before. We saw more spreads than ever before, because there was greater volatility. But the markets, not only did they hold well together, but the derivatives markets in particular served as a place where people could offload all those risks they were facing as a result of COVID. So it really has been remarkable in terms of resiliency. The other thing that we were worried about, and you hit the nail on the head when you mentioned cyber, was the concern that because people were working more remotely than ever before, that we would start to see more and more cyber threats. Well, I won't comment on whether the threats are there, but what I will say is that on the whole, again, our systems proved quite resilient. And so all of those investments we made over the past decade in improving cyber resiliency ultimately paid off and continue to pay off.
Yeah, it's sort of an arms race in terms of the cyber threats, but it does seem like the technology is improving more and more for the security side as well as the threat side. You mentioned cryptocurrency and crypto assets, and they fall sort of generally under the banner of decentralized finance, DeFi. And we're seeing also an acceleration there, I think, of some of these really, truly transformative changes that are emerging. Talk to us about whether you think COVID is accelerating those trends, and if so, or whether it is or not, what's most significant there?
Well, I think those trends would have continued anyway, because I think there's continued to be a growing interest in both digital assets as well as blockchain applications more generally. But I also think, at least this is my hunch, that the fact that people were focusing and relying more and more on technology as COVID came, and they were relying less and less, certainly on interpersonal relationships in person, as well, quite frankly, with interactions with institutions. I do think all of that has even hastened the development of these applications. And so we're seeing now that this time last year, I think I had predicted, or at least said, that I thought that Ether, for example, which is a digital asset under the CFTC's jurisdiction, you would see Ether futures contracts and derivatives start to trade. Well, that has happened in the past year. And so I think you're going to see continued development. We have exchanges that are coming to the CFTC, crypto exchanges, and other sorts of things that maybe approach DeFi or DeFi one day. They're sort of evolving into that, starting to ask us for licenses, for example, and start to become exchanges regulated by the CFTC. So I think you're only going to see that trend continue. And regulators like us need to really understand what are the potential implications of DeFi. And can you have a truly DeFi system or something resembling it that still nonetheless complies with all the traditional financial regulations, including, and some would say most importantly, AML/CTF, anti-money laundering, counter-terrorist financing. And how do you build that in the protocol and the system infrastructure to begin with, as well as resiliency issues, market integrity issues? So it's an issue that we are focused on, laser focused.
So you've answered some of this already, but when you think about these DeFi trends and the crypto trends, what do you see as the upside potential as we move more into these new modes? And you've already touched on some of the risks, but are there other risks as well that worry you?
If you just start from the top, you say, well, what are we doing here? We're taking a centralized financial system and potentially decentralizing it. Well, when you have something that's centralized, there's a lot of risk in centralization. There's some risk in decentralization as well, but if you think in terms of systemic risk, for example, having a very small number of the world's largest financial institutions basically carry on the global financial system, that in and of itself is obviously risky. So the idea that you could decentralize all of these things, including the transactional framework for finance around the world, I think arguably reduces the kind of systemic risk that you would have throughout the world. Now, that said, there are some instances where you could say, even in a decentralized system, if you had a stable coin, for example, that approached the world's largest currencies, for example, and there are issues there, well, that could create more risk. There's also integrity risk, the risk that the financial markets will not have the integrity because there's a glitch in the system, for example, and we've seen 50% attacks, et cetera, et cetera. So I'd say that on the whole, I am excited about these changes towards a more decentralized financial system, but I think we also have to be realistic about the potential risks that come with them as well. And so we are focused on those risks, and market integrity is number one. Resiliency, I think, is certainly number two. And there's a whole host of other issues, including customer protection. But nonetheless, there is that trend in that direction, and we don't want to necessarily stifle that. We want to make sure that innovation occurs, but it occurs in a responsible way.
I know this is not directly in your purview, or at least I believe it's not, but do you have a view on how the prospect of central bank digital currency may change the equation in these markets?
It's a really important point, and I think there's probably a metaphysical question between a central bank digital currency and a faster lightning speed payment system. In other words, I'm not sure there's actually a distinction between the two, but one thing that is abundantly clear is that the international payment system needs to be overhauled. It is far too slow and far too costly for the millions and hundreds of millions, the billions of people out there that need access to payment systems. Because one of the questions you asked is, well, what are the major benefits of decentralized finance? Well, the biggest benefit that I can see for the people is inclusiveness. People that, particularly in countries that don't have a currency that, let's say, they can depend upon, that don't have a stable currency, they can start thinking about using digital assets on a blockchain network to basically secure the value that they have. And so that to me is a potential really a big benefit. And the more that we see central bank digital currencies and the more people around the world can access them, and they're easy to do, particularly cross-border transfers, I think you'll start to see much more financial inclusion.
Yeah, I couldn't agree with you more. And it does seem like the pandemic is speeding up those trends as well. So you and I have had a chance to talk before about the CFTC's innovation program, your lab CFTC initiative. It's really not an initiative. It's now it's wired into your organization. I'm a big admirer of it. Talk to us about how a financial regulatory body like the CFTC can be truly innovative and keep up with the technology trends that are facing us all.
Well, it's a great question, Joanne, and it's one that I think at the CFTC we ask ourselves regularly. Technology is moving so quickly, and regulators are trying to keep up. And so we my predecessor asked this question and his predecessor asked this question. How do we keep up? And so one of the big things that the agency did, and we were, I think, the first American agency to come up with an innovation arm, was the creation of Lab CFTC, which ultimately has a twofold purpose. The first is external facing. It's a way for innovators that are out there that are working on new financial innovative technologies to meet with the regulator to understand what we do. And so it builds that bridge. The second function of Lab CFTC is more internal focused, which is we have roughly 1,000 people when you include full-time employees and contractors and everyone working in the agency. And all of them need to understand what the trends are. So Lab CFTC is a way to keep our own agency abreast of what's going on out there. So you put the two functions together and you really have a way of having a regulator whose finger is on the pulse. And so Lab CFTC was so important that I elevated it to report directly to the chairman and put it on par with our other policymaking divisions. So that way, if we're thinking about, well, how do we reform our rules regarding exchanges or our rules regarding brokers and dealers, we actually can have Lab CFTC in the room providing insight on great technologies and what's going on out there. And so that is a major trend. The other thing that Lab CFTC does is it also, we've entered into a number of MOUs, including one of our first was with the Monetary Authority of Singapore, who obviously is cutting edge in these areas. And so we have a way, regulator to regulator, to share important information and insights securely through these MOU mechanisms. And so that's been really important as well, because we can not only get a sense of what's going on outside our jurisdiction, but also how our fellow regulators are thinking through these issues.
Yeah, that's a perfect segue to my next question. We're at the Singapore FinTech Festival, Switch Festival. I believe this is the largest financial conference in the world by far. They'll correct me if I'm wrong, but I think maybe last year there were 60,000 people or so in Singapore, many tens of thousands. And Singapore has been such a leader in this space. The globe is getting smaller. The pandemic has accelerated that trend too, I think. What are the answers to how to build a well-functioning global financial regulatory system through bilateral arrangements like you're describing, multilateral arrangements? What are the priorities for doing that?
First of all, it's important that we acknowledge that while regulators and countries have borders, often financial markets don't. And then when you add to it fintech and digital technology, well, absolutely. I mean, by their very nature, they are meant to go over the internet, to go from country to country, to go all the way around the world, in some cases in a split second. So really, to have an effective regulatory regime for something like a global stable coin, for example, what we really need is regulatory coordination. And I would say there are two levels to that. The first, as you mentioned, is basically the bilateral relationships. And those are really important, particularly for mutual recognition, that if the same activity is regulated in the same way in another country, it doesn't necessarily make sense for us to extraterritorially export our regulation into that jurisdiction if ultimately we're all on the same page. So there's been a lot of talk, and this talk has only been magnified not only by COVID, but also by things like Brexit, for example. So issues regarding equivalence and recognition, that's been really important part of the equation, and that's generally done on a bilateral basis. But the other big venue for discussions is in the multilateral organizations. So for example, the Financial Stability Board is laser focused on what kind of activities can give rise to systemic risk, either regional based, but particularly global systemic risk. And they think about standards and other ways to address those risks, and it's really important. IOSCO, for example, I serve as the vice chair of the board of IOSCO. We are working on these issues. There are a lot of customer protection issues, particularly for digital assets and other things that are going across borders, as well as other types of fintech developments that maybe don't necessarily rise to the level of digital assets, but nonetheless are absolutely critical. People getting loans for their home mortgages and whatnot. But these are going across borders. So it's really important that we think about at these organizations at the multilateral level, maybe some basic key standards that all of the jurisdictions can then go and adopt. And what that avoids is a race to the bottom, or a situation where market integrity, for example, is sacrificed because of competing economic interest.
Yeah, the Singapore took the lead to a great extent in the recent G20 tech sprint on regulatory tools, and I had the honor of being a judge in it. And the Bank for International Settlement and the Financial Stability Board and the G20 and MAS and other partners were involved in it. And it leads me to another question on this, which is the focus of the part of it that I worked on was how regulators can get and share information digitally to enable the kinds of things you're talking about, the cross-border safe sharing of information, safe for enforcement actions and so on is so critical. What do you see there? Are there ways to accelerate that type of challenge?
There are, and in many ways, before you even get to that challenge about sharing data across borders, we had to look at ourselves, at the CFTC, for example, and saying, are we operationally where we need to be able to ingest the data, perform analysis, clean the data, and be able to generate sort of decision making based on that data. So, for example, we created very recently a new division of data. So for the first time, our agency has an entire division alongside the policy divisions, which focuses on the question of what kind of data are we getting from our markets? And in some cases, we get data that no one else in the world has. And we're focused on how do we make that data uniform to a degree, as well as cleaning it and getting it to the point at which it can be useful for policy and decision makers. And then at that point, then the question is now that we've got something that we think is pretty interesting and useful, how do we go ahead and potentially share that with others? And so right now we are negotiating a MOU, for example, with the European Union, with ESMA, our largest clearinghouses. We negotiated a similar MOU with the Bank of England on, so these are large clearinghouses. So it's very important that we have a predictable, very secure way of being able to share information across borders. And so we have been working on that as well. But in many cases, as I said, charity begins at home. We've started by looking at ourselves and saying, well, number one, do we have the data we need? How do we focus on that? And then once we have something that's really useful, how do we share it abroad? The other thing that we've done, Joanne, is sort of a less of a regulator to regulator, but in terms of thinking about how do we use data, is within IOSCO, our Financial Stability Engagement Group, we set up a data working group where for the first time, for example, we are able to look at a dozen or so of the major jurisdictions and ask the question, how much margin is in all of the clearinghouses in those jurisdictions? Because we have all of the relevant banks and supervisors participating, central banks and supervisors participating in this data gathering group. And that has been tremendously helpful because it's enabled organizations like IOSCO and the FSB to really think about, now that they actually have hard data on things like margin, how do we then make decisions or identify issues based on that?
Yeah, that is exciting to see. I think every regulator I know in the world is working on this very same thing. How do we get digital information instead of analog age information? So I think we only have a few minutes left. I think you said earlier that in the COVID era, we're seeing technology we already had being adopted and put to use in a faster and faster way. And my view is that we have the technology that's required to digitize the regulatory processes and system. But what we don't always have are the cultures, the structures, the legal frameworks, and all those things make it hard for regulators to adopt new technology at the pace that you have to. So I want to close by asking if you have advice for the many regulators who are listening to us. And how do you make this leap into the digital age as a regulatory body?
I'm not sure if I have any magic answers to that question, but what I can tell you is sort of a vignette. Our enforcement division, so Lab CFTC, obviously their whole job is about innovation and data. Our enforcement division is among the best in the world. Their job is to make sure that the markets have integrity, that wrongdoers who break the rules are held to account. Many of them are lawyers. In fact, largely all of them are lawyers by training. They are not technologists. Many of them are used to writing briefs and submitting them to courts. So they are not the likely bunch that would be engaged in sort of digitalization. But what we were able to demonstrate to our enforcement division was that something like spoofing, which is basically a form of market manipulation that only occurs in electronic markets, where computers at the speed of sound or light or something of that nature are literally putting out various bids and offers, but with no intention of filling them. Rather, the intention of essentially manipulating the market. Well, we are not able to make a case like that or be able to discover that without literally reams of data and in some cases years of analysis. However, we were able to come up with an algorithm and other digital type technological tools that allowed us for the first time to be able to establish and win cases that allege spoofing based on that technology. So in other words, the simple answer is that when people see the power of technology to do their day job and the difference that it can make in pursuing an agency like the CFTC, our mission, they start to warm up to it. And so that, I think, is the single biggest thing that I think if you can demonstrate that, you can start slowly getting people on board the paradigm of change.
That's a wonderful insight. Chairman Tarbert, thank you so much for joining me on the panel today. It's been fascinating to talk with you. Thank you.
Thank you so much for having me.
Thank you, Joanne and Chairman Tarbert, for that discussion.